Okay, hi there, guys. Hope we're all doing well. Just let me know if you can hear me loud and clear, and we'll rip into it. I might be having a problem with my little phone. So, did anyone get the alerts? Are okay? Just log off and on again. Alrighty. Okay. Sorry, guys. I'm just playing around with my mobile just to see if it's all coming through nicely. Got a feeling we've had a few issues with. If anyone doesn't know, the occasional from the server. It's over in Singapore. The server's had a couple of issues itself. Here we go. No, I just had to log off and on again. All good. All right, so you can all hear me. I'm guessing you can hear me loud and clear. And I'll get up and running now. Welcome to Trade Setup and the live stream. What are we now? The 25th. So a few more days till the end of the financial year. Just checking my streams coming through on my phone as well. Yeah, so a few more days. We'll see how we go. Not a massive day today so far. Starting off the week probably on not so much on the back foot, pretty much just on a sour note. I think the US was up slightly. Well, not the Nasdaq. The Nasdaq gave up a few points, but the Dow was up about 100 and something points. The S&P was up, I don't know, a couple of points, about 5 or 6 points on the index. So US not doing too bad. There's still in everyone's mind, I guess, what they're always concerned about is a trade war. These talk, the rhetoric on the trade war and what Trump going to say next. He did get out and he's a Twitter master, jumping on Twitter and talking about the EU and their tariffs. He's going to potentially put it up. And the EU said, of course, they're not going to get dragged into a Twitter war, but they're happy to put their tariffs up too on US goods if they get slugged a bit more. So he's still, although nothing's really happening as such, and whether or not it is just a tactic from Trump, and that's what he has done in the past, or whether he's just ready to go to a full-blown trade war, pretty much on all fronts, not just China, but Europe as well. I heard something about Russia, I think, as well. So he's not going to be a popular man around the traps when he goes into the EU meetings or anything. So, but we'll see. G'day, Gino. How are you, mate? Nice to welcome. Anyway, nice to see you. So yeah, that's the US wasn't too bad. The Europe was actually up strong as well, and I think their biggest concern, well, not the biggest concern, but one of their concerns is that Italy. I don't know if you saw from the morning reports that I pump out, or if you read it. They had a couple of new people on the uh, politicians, what do you call it, on their board or in Parliament or whatever, that were against the euro, been in the euro or been in the EU, have been sort of vocal about it, but they've been brought on. So there was concern that they're going to be pushing again to get out of the euro and be the second casualty or another casualty from the EU. And the euro, obviously, so that's why the euro took a bit of a dive, I think, last week. But then they've come out and assured everyone, I think on Friday, that no, we're happy to stay in, we're happy with the EU, such and such. Italy, of course they would, because they're going to be supported if they've got a problem with their bonds and their debt. They're going to be supported by the EU, so it's stupid for them to leave. Um, or thoughts of that, but it was a concern. And obviously, you can see that the DAX and the FTSE took off. Not so much the DAX, obviously, but the FTSE. So Europe gained as well on the back of that. So they were doing all right. Today, oh sorry, before I take this picture off the screen, what you can see on the screen, that's obviously Trade Setup, the live stream. We only give general advice, so just read through that when you get a chance, or if you look back on the stream. Join us on Twitter, top left-hand corner. Top right is Facebook. We're not as active there. You prefer, probably be best to join on Twitter. We do get bits and pieces we send out there a bit. And most importantly, subscribe to us at YouTube in the bottom right-hand corner. So when we do start doing some more streams, and I've been saying that for a while, we've got to get organised. You seem to have my plate full sometimes. Yeah, you'll get an alert from YouTube to go live. Anyway, let's get rid of that and change that. So that should be a bit clearer now. Go look at the markets. Obviously, look at that's the S&P. What are we on the daily? And what I'll do, thicken that up, get rid of that. So that's your daily. It's still, I mean, it's still holding higher lows. We're just coming into this region now around the 28 mark. So the good thing that I don't mind, and we spoke about this a few weeks, the thing I don't mind at all is that, take a snapshot of that. What we're doing, you've got to, I don't mind that it's actually fallen short a bit on the S&P. So this is the S&P. Anyone that doesn't follow the US too much is the top 500 stocks, with the Dow's top 30. So it's a broader, obviously a broader index. We've just popped up into that resistance, a touch below 2,800. The thing is, what you can see, high low here matched off with some good, good selling pressure down here. The next high low, it wasn't too bad selling pressure. That was really pushed it down. This has been a bit, and obviously you do get quite a bit of selling pressure when you get up into a resistance zone. There's going to be some profit taken if you bought it through here, in here. If you brought it up into that resistance, there's going to be some sort of reaction off from people taking profits, so on. But what you can see, it's been quite heavy selling compared to the recent pullback, but we're nowhere near it really. We're sort of one third to two thirds we like to see of in a pullback, in a corrective action. One third to two thirds is a good little zone to pull back. The deeper the correction, it's more potentially a weaker move up is going to be, or you're getting towards the end of it. But a shallow retracement, potentially what you see within the first third or so, is more conducive of a stronger market. So what we've done is come up, touched on resistance. Obviously, you've got some good little selling pressure. You've got a bit of a pop up these couple of days here. You can see it's actually quite interesting. This is what someone said. I read somewhere 3 days in a row where it's opened down and rallied. So intraday, if you just looked at that intraday session, it was up from start to finish, but on the daily chart, it's actually lower. So it's in a downtrend, but each day was getting bought up. So it's interesting. Um, so whether we do just hold up here, and this is another little minor double bottom, we start to push up through here, that would be good. And you see this, buyers start to step in. The pressure's been down, but it's been well and truly soaked up. I'd say soaked up by the buyers, and see if we can pump up through that 28 and start attacking up towards the highs. We'll see how that goes. So that's the S&P, the broader index. The Dow's probably not looking quite as nice, but you'd expect maybe we're going to be somewhere down here. We get a double bottom. You can see that selling pressure has been quite heavy as well. On the Dow's been a little bit more heavy. I think it's because it's been affected more by the Trump talk or tariffs. I think Boeing's in the top 30, and that's been beaten around a bit. There's a bit of every time there's talk, it was getting sold off. So I think that's been dragged lower a bit by that talk. But either way, it's still holding the trend up until we break through this. We break convincingly through that low at around that 24 250. That market's still heading higher, even though you can't put a support line up through here. And if you did, this is just as an example. If you were looking at it, and as a side note too, this is why it's important to know where your anchors are, because if you're doing that, you go, oh, it's broken, we're in a downtrend. We're not in a downtrend. Never in a downtrend until you break the latest anchor. What we could do is just go, like we said, we head up, we pull back, we pushed up, we pull back down to about here. That's broken your downtrend, but we could easily just go, change colors. You just pull up short here and start to chop around a bit and then build, and then boom, up we go. And anyone that's sort of sold out here, as soon as you break down here and they bought it here, they've taken maybe a break even, maybe a small loss or a small gain. They might miss out on this next one because their mindset is that, okay, we're in a downtrend, but we're not, because we haven't broken. So the market can do, when you regards to anchors, always take note. If that's the anchor there, the market can do anything it wants. It can go back to here, you get your lower high, and a lot of times lower highs, people are saying, oh, that's okay, that's the downtrend's broken because it's got a lower high. Not necessarily. You're still, in my mind, the way I look at it, you've got to break that anchor for me. And this can be done quite a lot. This kind of setup can be, that's 2 moves down just to squeeze people out. You get people to get nervous. You've all types of mindsets of people that will jump into or jump out of a trade without knowing the technical setups. They're not quite strong on the technicals or even your fundamentals. And they get a bit nervous. They don't want to give up, especially if you bought it late. They're chasing the market up, and then you get this lower high, and they're generally the people that get squeezed back out again. The market resets, and up she goes. And then again, they're chasing, they miss out on this, they get angry because they've taken a loss here, and they start chasing it. They want conviction that breaks out that highs, then they buy it, and of course it starts rolling over again. You get that same sort of pattern can repeat itself. So just be wary of that. I mean, like the Dow has, like I said, it's just broken through that, if you call that a trend line. But the major move, we got little lows there, higher low here. Until we break that, we could easily just chop around here, and then up she goes again, takes out that high, and then we start attacking right up to 26.5, say. But we'll see. To the ASX, I'll just quickly look at the FTSE. FTSE in big day for them. And look at this move. You've got one consolidate here, that secondary push down. So that's going to clean a lot more people. So it'd be interesting to see now on the FTSE whether or not it can pop up and start. And if we do have a pullback, if it can build a higher low, and then what you'd expect is not just a grind higher, but something like this where you get that good push higher and then a bit of a grind lower. So it changes the dynamics from a grinding up. When it's grinding up, it's not strength in buying, and then it has that accelerated move down. When it changes, it starts to have an accelerated move up as there's more buying conviction, and then you get a bit of a grind lower, and it comes into a zone, nice little zone where it can build a higher low. Um, like this is acceleration lower, and you get a bit of a grind higher, another acceleration. So you get these when it's the dynamics has changed a bit, it can start pumping to the upside. So what we'd be looking for here is really that a bit of a pullback, maybe a bit of a grind. I'm just trying to find an example. A bit of a grind low, a bit choppy, but hold up above that 75.50, and it can hold a higher low over a number of days. Then I expect that could pump up and push up through 79. But again, we'll see. In the DAX, that's FTSE. The DAX, similar story. More of a double top up here. It's having a deeper correction, but it's just washed out that low, so it can easily turn around here. Technically, it's just cleaned out that low, and it can start back and fill. It's in a good spot. You can see on the stochastics, the energy it's taken to go from the highs up near 13.2 down to 12.5. It's taken quite a bit, but really it's only come back down to test or just wash out that the most recent high low, which is around 12.6. This you see here, that low. What's that low? 12.5, say 12.550. So if we pop up from here and we start holding, start to build, look like we're building a higher low, this could be targeting up a move up through these highs at 13.2, potentially up to 13.5 and so on. Again, we have to wait and see. So we've got the XJO. I mean, beautiful, really. It's gone up through, you look through that 61.50, that zone up there. And we were talking about this for a while. This little push up here, okay, it didn't on the daily anyway. I mean, this the last few weeks. It had what, 7 or 8 weeks up, bang, up straight without a pullback on the weekly at least. And that's gone straight up into that 61.50, then failed. People were probably expecting, okay, it's tried twice now, that's a double top, and that's going to drag in some selling. But what it's done here is just squeeze them back out again. So anyone that's jumping in here, if you're an index trader or if you've got out of your stocks or whatever, because you're looking at the double top's not confirmed really until you get again a break of that anchor, and that anchor's far from being broken. It's way down here. So what it's done, and I love to see that type of price action, it's backed off from that double top. The MAs are up, and on the weekly it's still up. I mean, the weekly trend is up for sure. The MAs are turned back up with this move up. It's pulled back to the MAs, reversion to the mean. This little pop up here, if you're looking at this stage, that was a cracker. And then really for me, it was just buying as soon as it got through that high on that one day, bang, you know that's going to have a good little run up. And it did. It just took out straight through 61.50 and up she goes. So from here, getting a bit extended up here. So we'll just have to see how it goes, whether we can, I'll get that, whether it can really just, I don't like that, do I? Oh no, I'll just draw that on that chart. Chart's going to be a little bit smaller. So whether we can just, so that's the high, we just push through that 61.50 off a higher low. So you really just be looking at taking that, well, it's pretty much over sort of a trend, that line up through there. We may pull all the way back, so we may come back below 61.50, but really that trend is up on the daily and it's matching off to the weekly. May need a little bit of a heat to come out of that market, a bit of a pullback on the stochastics, a bit of selling pressure to come in, but you want to see if it gets soaked up. But you can still do the same things we did here. Basically, we've got this sort of a rally. Stochastics hovered around overbought. We come all the way back down. Selling pressure is quite strong. It was holding up, and then you get this sort of action. It gets reset again, and we have another leg up. So whether we do that, we can just go from here. Just go. We've had a big run up. That's this leg. bit of choppy action as it holds the highs. That would be really nice and strong if we see that, and then bang, you get another spike up and it takes off. I'm still thinking longer term we could be targeting up towards 68 on the weekly. I'm still partial to that. I think it's quite good, but there's a few things that have to play out. But then again, you can see how we decoupled from the US. The US is looking negative, and we had some couple of good days out of the blue. Whether that's a bit of window dressing, we've yet to see that just yet with the push up through 6150, or whether it really is that push up to 6800. Because don't forget, when other markets, there's a big flow of money around, not just around stocks on an index, say from different sectors on the ASX, but it's around the globe as well. You get a cheap Aussie, a strong US, for example. They might flow Aussie over the uh, sell the US and buy in the Aussie at cheaper rates. And what are they going to do with some big dollars? Start pumping into our market, because we've probably underperformed compared to the rest of the world. DAX all-time highs, FTSE, US continually is making all-time highs, and we've just had the most recent correction. It's just bought it off the all-time highs, whereas we're still another 600 points away. If my maths is right, that's about right. 600 points away. So haven't even got there yet. So it's probably not it could be a good little thing. If that's the case, we get a bit of a flow of other cash as they go sideways, they start to correct a bit, and we have a bit of a run, then there's going to be some opportunities popping up. Anyway, that's my indices. I think they're quite it's looking good for us at the moment. That's the Nikkei. That is the Hang Seng. Not looking that great, but that could be just part of your one move down, consolidation through here, and a secondary move down, just a bit of a washout. May come down to 28 and start to bounce again. So we'll see how that one goes. I don't follow it that much, to be honest. And if you ask, you can see that trend up, low, low, comes somewhere around the 28 mark, so it might match up quite nicely. It comes down to support, and off she goes again. All right, any questions just on that, guys? There's two things I want to talk about. Start putting some, while we're at it too, start putting some codes of stocks you want to take a quick look at. Chuck it into the chat. And for instance, for anyone that is watching it that can't get into the chat and doesn't know why, it's probably because you're not logged into Google, or you haven't got a Google account. You need a Google account set up. As you can see, this is ours here. So I'm logged in as TradeSetup, and I can sit there and chat in there. Otherwise, the only other way is just really to watch it. If you're not logged in, if it's just a normal browser. Anyway, so that was me. Now let's, what I was going to talk about today, I sent out an alert end of Friday. It was more of just, I found it interesting, a good little, and it's more, I didn't quite notice it too much. I mean, it's stuff we take notice of when we're trading, but I didn't notice it was on MVP. So I sent out an alert on that on Friday, and I think it's a good discussion topic. And what I'll talk about also, I just want to touch on US yen. To be honest, it's just dropped like I expected, but I didn't get on board myself, and I didn't get to send out an alert. I was going to send out an alert to sell and missed it. So I thought, well, hey, let's just talk about it instead. Talk about what could have been. So this is, I'll get onto the US yen first. I think it's worthy having it's good having a bit of a chat about this. Where am I? Auto, get rid of that. I think we've spoken about this for a while. So what I'm seeing is this, obviously you can see this downtrend. The market's pushed all the way down. It's popped back up, found some selling back up here, another swing level, and that's sort of conformed to that. You can see that that downtrend, and then it started having a leg down. We found some support in here, popped back up again, just basically touching around or that zone. Found a bit of a sell zone in here and started heading south again. So we've got these two roughly equal legs down on the US yen. And this is the daily chart I'm looking at here. Right, so that it could be, I mean, so what you'd be looking at on the longer term, maybe this is going to hold up in here, and we've got this market just squeezing in on itself. So we could be getting some higher lows. By that, I mean something like this. It's squeezing in, you can see that. That doesn't matter if you're trading on the shorter term. So this is the daily chart. So you do, in respect to what I was looking at here, when it popped up, this action here on the 30 or 4-hour chart, or even the hourly chart, was looking quite negative. But in the back of my mind, I've got this type of price action here that I'm thinking, if this is just a squeeze, it's not going to take out, potentially it's not going to take out that low, it's going to fall short in here, somewhere around here. But either way, that's say around 106 to 109. That's quite a big move, even if longer term, it is not looking too weak. I don't really care because if you're looking from a half an hour chart or an hourly chart, there's still a lot of room to move for a trade, if that makes sense. Just going to refresh that. So does that make sense here, guys, to what we're looking at? So on the bigger time frame, yeah, this could be your two moves down, and we build a major higher low somewhere in here, okay, and then the market pops up. All right, from right now, I'm probably going to be wrong, but longer term, it doesn't mean I can't get a couple of hundred pips out of this trade. Even if I am wrong longer term, I'm sort of thinking it's going to take out that low and press down to that 100 zone, or at least touch right down somewhere in here and find some sort of support around that 105.40 to 50. But we'll see. So if you go down to the 30-minute chart, that's the one that I really liked. We're looking at this zone. That's the most recent. Let me just step back. I probably should step back on the daily. So we're focusing in on this zone in here. I'll draw it. That's rubbish, isn't it? And then I'll get rid of it. So yeah, we're focusing in on that zone right in there. All right, so if we get into the 30-minute chart, or even the 4-hour we start in, you can see, all right, we'll get rid of that. I don't really need that now. So we've had this leg up, and what we've done, we've got this support zone. We've broken down. So, and for me, the anchor here, you can see that anchor there. So what we've got is a bit of an anchor built in here. We've got this projection up, coughed up a bit. You've got another support zone that's building in here, built up, it had another press up, and it was holding this trend line all the way up, right up until about 111, 111.40. Then we broke down. So if you're looking to sell in here, that probably would have been a bit tough. It was a bit aggressive, probably a bit too aggressive for me. But I like the fact that longer term we've broken through that anchor. So for me, that's showing, okay, one, we've broken the anchor, we've broken up, we've broken down through, we've just broken that uptrend. So the dynamics, if it doesn't break the anchor, you've got to be thinking, okay, maybe we're going to build another high low and go again, or we're going to go sideways. But up until you break that anchor, up until we get this price action, I'm not thinking technically we're going down just yet. I want some further signs. So we've broken that anchor, then we've grinded back up, which the FX tend to do a lot. They don't just go break the anchor, go up, straight back down again. They tend to grind back up, and what they're doing in that respect is just dragging in, because people have been looking at buying here. They're potentially looking at it as a high low, and they're looking to buy it. They're getting dragged in here, and it's turning around and squeezing back out. This action here, if we go into the 30-minute, all this action here, you can see it's popped back up, and that's that secondary move up, don't forget. We pushed up, and there's just too much pressure, and we've got the same thing along the lows, and there's too much pressure, and we've just broken through this zone in here with this move down. We pop back up, and then we got a shoulder. What we love to see, our little shoulders there. And that's after all that price action we've just discussed, and there's just too much weakness for me to think that this was going to turn around and pop back up again. You add up all those things, you got this major bounce that's broken down, and we've got a major higher low, which is all this, sorry, lower high, which is all this zone. And then within that, you drop it down a chart, we've done the same sort of price action. We've broken here, and we've got a lower high in here, and then we've got a shoulder. So this is potentially the start of a secondary or good push down. But we'll see. It's just broken. I was looking at a trade with a push through 180 or so, or that sort of zone, and you can hold your risk up here. As it is, I've missed that. So now it's really just talking about it and seeing what happens from here. We just got through that low. Just got through that low there. So really, I mean, it's getting a bit stretched at the moment. You can see that's really propelled down the low. So we might get a bit of back and fill. If we can get another lower high to trade off. So the lower high we want to see, because we're trying to minimize our risk. And then if it breaks down at lower high, sooner or later, I would expect this to start to accelerate lower. We're getting a bit extended on the weekly, but I think on the daily, see on the daily, we've still got a lot of room to move on the downside. So if we do start to accelerate off the daily charts, there's a lot of room to move. We can really start making a big push lower. And you can see this as a major lower high. We've got this push up here, pull back, broken the anchor, push up. All this is part of a major lower high in context to this one. So if that's a lower high here, and technically you just extrapolate that out a bit, what I'd be looking for at the very least is potentially a move, somewhere down here. a push down here on at least just on that leg. And that, even if we're wrong, and that's that, one pop up, two, and it doesn't, and you can see by the action, it's not getting ahead of itself. That's potentially just the buyers, the longer term buyers are stepping in, soaking up, letting it move down a bit lower, getting it at a better price, and just averaging down before it starts to turn and they start pushing it back up and ramping it. Even if that happens, I'm sort of expecting a move down to here, which does give you quite a good risk reward, especially if you took that trade just off that lower high with your risk being around 110.30, for example. So yeah, I thought it was interesting just to go through that, have a bit of a chat about it, and just break it down bit by bit to see what's happening. I think we've alerted this US yen a while ago looking for some weakness, and probably now it's just starting to play out, but just have to see. I want to see this start to accelerate now. If you were short here and it didn't start to accelerate too much, I might be thinking twice, or at least taking a partial. Anyway, guys, so that was it on the FX. Any questions just on what we're saying there, or make sense before I jump into the MVP and have a sip of the coffee? I hope I'm still coming through loud and clear. I'll get rid of that and that. All right, so we all good? All right, let's just get into it. I know there's a bit of a lag here, so if you do have a question, I'll try and answer it as we go. Might have to backtrack a bit, but all good. Gino legend. All right, so what are we into next? I don't know if you're in Mel, but we'll talk about the MVP. First, I'll get that chart up. It's probably easier explaining through the chart. Remember where I put it. Here we go. So this, that's better. You can see that clearly. So this is what I put up on the app. Charts are fuzzy. Is it? Go to the bottom right corner. One just had to reset of YouTube. There'd be a little spinning wheel. Helen, click on that. Go to settings. Go to quality, and go to 720p, and it should fix it. You sure it's the chart that's fuzzy, Helen? Sorry, I had to say that. That's quite funny. All right, cool. I know you're going to give me a comment back soon, so I'm just waiting. All right, so this was what we're looking at. This is MVP Medical Developments International Limited. So I've still got some of this. We bought it up through here. I can't remember exactly my entry, but it was in this sort of zone here. I don't think I got that entry there. I might have added somewhere in here. I bought a bit. It was even earlier than that when it started coming off that support zone. It was probably not my typical entry, but I bought that mainly because we're working off a higher low. It was starting to confirm, um, and I did really like the story too. I did really like the story. So MVP, if you can go and Google it, have a bit of a read. They come out with a really good product. Penthrox, I think it's called. It's let me get it right. It's a non-opiate painkiller, and so it can be used by, I was going to say dentists, but emergency services, all that sort of stuff. So if someone's broken something, they can just suck on that. It's non-opiate, so it's non-addictive. So it's got a really good base and does it great. Obviously, it works perfectly. I think it's even better than what's going around at the moment. But the big thing is, I think, around the industry, all that for that sort of thing, product is that it's opiate, if I can say that right. So non-addictive. So it's taken off. I think it's been released around the world, and there's bit by bit, it's getting taken up by countries. Orders coming through. There's been a lot of good things happening on it. So fundamentally, it's doing really well. They're still waiting to get FDA approval in the US. So that was a big one, but I think not too long ago. So you can see that story there was building through there in the US, and it was kicking off up there. But somewhere around up here, I think they released it. It's not going to be as soon as everyone thinks. They gave more of a timeline. It's going to be a couple of years rather than 6 months or so. I think was what I was expecting. Maybe I was being a bit optimistic, but that's the story. And then obviously you're going to get that profit taking because people go, well, do I have to wait another couple of years until something happens? Either way, but they're doing that whole time and even through here. they're putting on more and more countries were starting to adopt it, and it was just doing better and better. I think sales going up, all that sort of. It's MVP. M for Mary, V for Victor, P for potato. So yeah, so that's the fundamental story. That nothing's changed there. It's still doing good. I think they come out with some news here saying something about projections were not going to be as good as what they first thought. Um, I can't remember why. It was more because they were using more in development and countries, as in even though they were adopting it, they're putting in orders, the payments to come through were getting delayed, or something happened there, and people weren't obviously too happy with that, and it got bang sold off down to here. So we'll see if that story, if the fundamentally it can still kick up and start kicking along again. So I thought it was really interesting once we started to mark that up of the different phases the market can go through. And if you look back on, go over here. I don't want to forget that one. So I've got to write that stop down. I kind of like that one. All right, so what have we got here? MVP. So this one here, you can see that's your weekly chart. It had a good run up here, and then it started backing off. And this is when I first found out about it. First heard about it. God, it's bloody hopeless today. Backed off here, and then it started. Then you get this little pop, and that's just that euphoria. There might have been quite a bit of buying. The stories is getting pumped up there, getting bought up. Um, then it started coming off, which they do. Which everyone's doesn't matter how good the story is always going to be people going to want to take profit, even if they look to take some off, keep a small call position and start to build again. And they trade. You can always trade around a call position, so you keep your core, trade around that, buy and sell, buy and sell, buy and sell. If you're really positive in it, once it turns negative, then you start cutting the whole lot. But that's a good contraction, which is expected in any market. Then what's happened here, the start of 2007, it popped up. Spent a lot of time. That's what I think was on our charts. So if we go back there was another, like what we say, accumulation phase. The market's is getting held up off support, bought up off support, but it was getting capped also as it was keep selling off. So you're getting this chop in price, and it was a good part of a year, probably from the start of 2017 to October before we really got that for me as a prime entry. So we've got that prime entry there with this little pop, and then it pulled back. So you can see there's a couple of days involved there before it took off again. And so that even if you were trading off that, and we got up to the resistance again and then started to fail, it could have been a profitable trade anyway. So it was worth the risk, but you never saw something strong like that. And then you couple it with a move down. It didn't quite get down to the same zone as it was around 460, 450 as these two lows. It didn't get down there again. So this is a high low you can get that accelerated move. So that candle was quite strong. Then you got sideways price action essentially as building that little minor inside high low. I love to see those inside high lows as an entry setup. You didn't get it here. You didn't really get it. You've got one here. Potentially it broke up through there, but it wasn't coupled with different price action. You know what I mean? With this sort of accumulation phase. So it's really important to note of what's happening and then, trade it accordingly. But having this in the bank of price action, especially after the amount of time. So time always goes in the factor of looking for a good setup. The longer time it sort of holds in the zone, you can get a good little guess. Well, if it's an accumulation phase, especially, it spends so much time accumulating that you would expect the move up to be hard and fast and a lot stronger, as in it can get on a lot further. So that's good. And everyone who sort of bought it there, there might be sellers on the way up. You've got this bit of a spike back here. So I did get out of some through, and I think that's what Mel was asking. You might have got stopped out with this pullback through here if you got out of the whole lot. I think we got out of some. I don't know if it was particularly an alert. I can't remember. But personally, I got out of some with a pullback there, and then really just re-entered, not on a really nice setup, but that to me is more of a big washout, and we come back down. It had gone so hard as well, so that was a big flush out. And then the news hadn't really changed. It was still quite good. Um, so you don't know what was going on. If it's not supported by something, then it could just be somebody's had enough. They get out. They got out too early, fat finger, whatever it may be. And of course, that bounced quite strong. And by the time it got up here, you know that, and we got this type of price action again, you know that's looking quite strong. But what we had up here, it spiked again, and then once you got a couple of highs and it started bouncing around like that, you can say that it's going to be, you'd expect to be more of a distribution phase where the buyers through here, it's got a bit ahead of itself potentially on the longer term charts. On the weekly, whether they're measuring it up, you can got this action up here, good pullback, major high or low, and then you've got that acceleration back up into new highs about 8. Touched on 8 a few times before we started building that lower high. Yeah, but that's sort of, I thought it was good talking about this just to see between distribution and accumulation. I know I don't talk about it a lot, and I haven't really looked at it a lot. But when you start marking up the charts, you can start to see those. If you can take note of those zones, they start to be a lot clearer. In a trendy market, it's a lot tougher because it just pops up, pulls back, high, low, goes again, pulls back, goes again. You don't really get that accumulation, but some people might call it basing. Um, when a market bases out, but like I said, MVP on the weekly, it spent a lot of time doing that after a good run up. So once you saw this on the weekly, you're looking at this, had a good run up, good pullback. The anchor was way down here, just below $3, and that was the most recent leg up. So that you would expect, it's got a bit of ahead of itself. There's going to be some profit taken up towards that $7 mark, and that's what you got through here. A lot of time, and you can see that that move down there when it came into that oversold zone by the end of 2017. That was only probably about 50%, probably 55 to 60% of that move up, but it hasn't broken the anchor. So technically, a lot of it is still looking really, really good. And then couple that with this move higher lows with respect to say that low at $4 to 425. These lows through here, it was holding up a higher lows, and that's where we go back to the chart through here on the weekly. So that was getting accumulated at a higher level than this pullback level just below 420 or 425, whatever it was. Higher low in here, that potentially is going to build a higher low. So sooner or later, the longer it spends in here, holding that higher low, the higher probability when it breaks out, it's just going to go on with it, which it did after you got this little entry. Even if you got through with a breakup through here, even if you got in here, that's more confirmation, but a bit later in the trend. So they're still really nice setups. It's just that your reward's going to be a bit less, but the probability of the trade going in your favor is higher. It's still quite high. This one's a little bit more aggressive, but the payouts are better. Less aggressive, but the payouts are a little bit less. So you've just got to factor those into your trading, really. But yeah, any questions on just what we're banging on about there? Yes, I did. I think to answer your question, Mel, I did get out of some there. I didn't get out of all of it, and it's purely because I really did like that story. It's probably the one time I was basing it on fundamentals. So, but when my call was around 525, I think my average was. So it wasn't that breakout there, but it was still way down here. So I was happy to hold that. And if you broke down below this low here, okay, we might have to think twice about it. Or if you broke back into this accumulation zone, I'm gonna have to think twice about it, especially after that run up. But instead, it was a spike low. It wasn't really supported by anything, and bang straight back up. So that V-shaped sort of recovery. And I was obviously happy to hold it up back up here again. Added some more on the way up, and I don't think I added much up here. For me, that was getting a bit late in the trend. Happy with what I got, and then we just went through this sort of distribution. Of course, you can see the lower high in here, potentially a lower high is based in here, but that's slightly different to this lower high. You can see that was the end of March because we just broken through that low. We've had it popped up again, found resistance up towards that 8, straight back down again, took out this most recent high low, dropped, got a lower high. So about this stage of starting to feel like we're going to see some lower prices, or we might be going into another phase, a big corrective phase. Does that make sense? And of course, we got this. It popped up. It was not looking too bad. Okay, and then bad news. Boom. Not really bad news. It's just it wasn't supported. It's not what people are expecting, and we got that big sell-off. So now we're going to that corrective phase. We'll have to see how it goes going forward. Still got some. Happy with it. At the confirmation point, what? Oh, this here. If I'd entered here, I marked that up. It's just below. I don't really need to mark it up. It would have been just below. You can use 2 levels if you're looking at it here. If that's what you're talking about, Gino, it would have been just below, or somewhere around 540, just below. I like to have it tight because for me, these sorts of setups are prime. I love them. I think they're very high probability trades when you got a push up. I'll draw it up actually. I did it again. I'll get down to the daily. Now I've got to drill down that, don't I? Is that it there? I've already lost myself. All right, that's it there. All right, so there was the two entries. So just looking at that, where'd you go? Where'd you go? It's slippery, this little mouse, isn't it? So you had some sort of resistance through here, and again, it wasn't even that high, was it? It was actually lower than that, somewhere around five. Oh, just say it's through here. So that's your original entry. You got that pop up because it's looking quite strong. So that was essentially your high low off this zone, popped up, pulled back here. So your risk on that one just below there, and your breakout, you can follow that through. So you can see that's 1-to-1 by the time it gets up to resistance potentially. So that's a good little entry, but like I said, very aggressive. But my risk if I was going to trade that, which I think I bought some through there, I'm not sure now. I think I bought some through a pop up there. That might have been the last position, but I got in quite early to be honest. So I had an average around 525, 524 on that, which is just below that, or somewhere around here anyway. Um, so that was that trade. If you got in, popped up here on this candle, you got in that day through that high, risk below. You're not taking much risk, and if it does stall here and comes back down again, then you'd have to think about it. You might just get stopped out at the same level. Okay, you took a chance, doesn't matter, and then see what it does. If it does that again, then you could do the same thing, buy it off the support, and look for this one that's going to probably potentially push up and through that resistance zone, because it's all in context of that weekly chart. Now on this trade, that's essentially the level you're breaking through. I don't mind, and we've spoken about this before. This is your inside trade. So there's two ways to attack this. And don't forget, this is going to be, this overall is a high low. If we go back, I'll just go back, get rid of all that. All right, so don't forget, you've got that, at that stage, you've got that price action. So what you've got is this push up, good pullback over a couple of days, but then it's positive again. So if you're looking at it here, you could have done two things. I like that entry because that is an inside this pullback here. It's a high low again. I love that. So I would have taken that on that day. I would have. I mean, it's Harry hindsight again. I could have easily taken that on that candle with a breakthrough that high. I know there's a little high just only a few cents above it, and my risk is not. It's less than 1-to-1. It's probably half to one. But having my stop below this high low, because you don't need it, in my opinion, you don't need to put it all the way back down here below this high low, because you got this gap, and basically if it's going to break through this one, it's probably going to take out that low too if it doesn't get through here. So for me, these sorts of setups, and that's this action, that's what I'm talking about. This time to set up here, that's an inside continuation. So the trend is up, the anchor's here, it's pulled back, hasn't broken the anchor. You've got this little inside setup, it's prime. And it's what you're doing is front running the traders that are breaking it up through $6, for example. Does that make sense? So what you're doing, for me, that's a high probability setup. You're going with the trend, and all you're really doing is taking a smaller risk on it rather than taking a breakout here with a stop all the way back down here. You're taking an inside level because, I wouldn't say 90% of the time, but the stats are somewhere around there. 90% of the time or 85% of the time, they lead to a breakout of that other high, which is the next high, the main high, around that 590 mark. So if that's the stats, I'm going to take that trade, that setup all the time. So I reckon it's a cracker. So 90% of the time I'm going to be right. It's going to lead to a break up there. And if it doesn't, I'm not taking much risk on it. But you can imagine if it does break up through here and then you get that retracement, it fails anyway, the risk you're going to take on that overall breakout is a lot more than that inside continuation trade. So yeah, risk could have been just below, risk could have been somewhere around, what is that, 540, 545, and entry somewhere around 580. So you're not taking a massive risk on that. So yeah, it's a cracker. And then after a couple of days, you know that you've done the right thing. And in here, you could have moved it up here, could have moved it up here. By that stage, the market's popped up. If you had your stop here, you wouldn't have been stopped out, but it's this action. Once you get your double top, I would always, because for me, that's confirmation. That's the next high low. Could have moved it up here, and then you would have been stopped out. So you've made probably not a lot, but you've still made 3-to-1, maybe 2 or 3-to-1 on that pullback. Or if you stopped out, I took myself out of half there, locked that in, and then I don't know where I re-entered. I might have re-entered on back up here somewhere. So either way, I mean, it took a little bit of a loss, but it is protection. It's locking some gains away because you don't know what this is going to lead to. So that was it. Yeah. So it did from here, it did move up, and then you get this big retracement down here. I mean, that's going to happen. There's times that's going to happen. That's why you probably at that last stage you would have moved your stop before that happened. As soon as you get a couple of days, a couple of red days off that double top, you could have moved your stop up to here, 650. You would have been stopped out, but that's the nature of the game, isn't it? You just sit there and go, crap, I got stopped out. But that's why you always got to manage your risk. Once you see, once you've entered here and this played out really nice, it did play out quite nice. This probably not as nice, obviously, but you've still got to manage your risk. You don't know what's going to happen. Um, like I said, I've taken some out here, and I was happy to keep some. If you come all the way back into this zone, I would have been a bit upset and probably stopped out and closed out and just reassess it. But of course, it didn't. It took off here, and then once we got up through those highs, it was looking better again. But yeah, that's just the nature. You've got to manage your risk. You've got to know exactly. I wouldn't be holding the next position down here. I'll be holding my stop up, raising it up here. I'd like to tighten it up as soon as possible because all this means that when you get this big flush out, what you've done is put a lot of these buyers back on the sidelines. And what we've done is come all the way back down to that, basically back down to where that entry was. I'm starting to get really messy there. Sorry about that. All right, so that's what we're looking at. So you can see that's come all the way back down to basically that entry where we're looking at entering. So it always pulls up to a level anyway, and then it's rejected that and it's come straight back up. So if you're watching at this stage, you didn't stop out and you're lucky enough. Not the best risk management, but it's paid off okay. Yeah, I don't technically use ATRs as much. I like to use levels, Gino. I like to use levels like that because that's it's when you're proven something's changed. Um, I don't know where the ATR would have been or what they would have given you. I mean, sometimes the ATR can give you a stop somewhere around here, and for me, that's not as it's going up. There's no reason to put it there. So I like to use levels because for me, if the market's that's your traditional Dow theory, higher highs, higher lows. If we start getting it breaking through there, pushing down, something's changed. I'd rather be out. Uh, I've got some sort of heads up on a lower high, but again, um, if I'm following this up and I've had this trade for a while, I'll just follow it up here, 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 and by this stage you get to here, you go, oh, something's changed here. If I bought it down here, that's okay. It's still profitable. I'm still giving myself a chance for this trade potentially to do one, two, come down, and then start to squeeze again, and then continue. And I haven't stopped myself out, and then again, just start to raise it, manage your risk. You don't know where it's going to go to, but I want to give myself a chance for it to continue. And there's times when, okay, you take a partial. I like to take a partial if it's pushed up into a resistance zone. Say it's pushed up here, and then I get a lower high, I'll get out of half, or I'll just get out of half when it ticks up there, especially if you're up quite well. Um, so there, you might just push, okay, take a partial. When it pushes up into that zone, you're taking a partial and then manage the second half. You might give yourself some more room to move on it. But essentially, I want to be proven wrong. So when you're only really proven wrong when it's taken out of swing level. Um, then something's changed and you don't know what it is. So you'd rather be on the sidelines while you figure it out than be in it. Anyway, so that was that MVP trade. Any questions? Does that make sense what we're talking about? Was it worthwhile talking about it? If it wasn't, tough. It's done. But yeah, feel free to chuck in some um, stocks. What about, well, give us actually, let's not talk about too much. Let's just take a look at where the market is. Um, where we're at the moment. So these are ours at the moment. Got a few on the way. Although that's come down, it's still looking okay. Still up for us. That's ATS. Whitehaven still kicking along nicely. ORA, Aurora, still going well. CAJ, that's a bugger. That was looking okay just a minute ago. This is one of those stocks that does it every day. It okay on the open, and there's a bit of selling around midday, and then it pops up into the close. So that's Capital Health. That the weekly's great on that one. You can see that weekly big sell off here. Started building, pull back, that higher lows held. So you'd expect that to go higher, somewhere around 40 or above, which gives us obviously a chance to get out a partial exit on that. Yeah, but that's about it for us. That's Transurban, even though that's Paul, if you're listening, it's your bigger blue chip, but it's not doing anything. Don't like it, mate. That's why I don't like blue chips. They're so bloody slow to get any returns on them. Sorry if you can hear me drinking my coffee. But that's it. All right. Look, we'll probably call it a day there. Um, all right. Let's have a quick look at premium for you. I've always liked premium. I think it's a good little. It's a cracker, and we've traded that before, but I haven't traded it lately, which is. And honestly, I couldn't. I probably missed that. That was probably the only entry for me, but I didn't. This price action not super strong for me. Um, I found this hard to trade. That one there. I mean, it could have easily been tradable. We've had it before here. We had it a long time ago. I think we had premium in here somewhere. We might have had it here. So we've traded that a few times. But that business, the business itself, I think they just keep kicking goals. They keep increasing funds under management, which is obviously increasing income. Um, so fundamentally, I think it's a good story. It supports it supports the trend until. So that's why ideally what I'd look at, well, for most stocks, some I don't even bother with the looking at what they do. And it doesn't really bother me because the chart looks really nice. But others, I do like to just read a bit about it to see what the story is and whether it's a strong enough story to support the chart of what I'm seeing. And this one, I think premium is they're doing quite well. Who knows? I don't know what valuations are on this, or whether, of course, analysts change their mind every second day. They might have a target of $2, and as soon as you get this massive sell-off, they change it to $1.50 and they start bringing it down. So I don't know how they do that, but especially when it's not supported by news. But anyway, that's my little rant on them. Technically, let's get a look at this. Um, but what I see, it's the thing is that's your anchor, and this is what people can get caught up on. You can see the market's moved up. I wouldn't call this an anchor as such. Then it had a little leg up. This was enough of a bit of a retest. I would say that's a good anchor, that 57 zone through there. And then it projected all the way up without really looking back. And then you got this big sell-off. So people would have got nervous, obviously. Well, they got nervous through there with every reason to get nervous, and it's popped up. And then you had this secondary move down. And you've got this washout. So that there alone would have cleaned out quite a few traders, especially if you bought it anywhere in this push up. You're behind the eight ball. You're getting annoyed because you've got this lower high. It's come down, but it only really washed out the low. And the fact that it's open, washed it out, and then closed above, um, for me, is actually a positive. I would put more emphasis in that being a washout than it's a clear break, because that's not a clear break at all. Clear break is when it opens, goes down, and closes below it. And you go, okay, that's a break, because the next day on a daily chart, it's broken. The next day, you might just keep. I mean, it could pop back up into the range, and then you come back down. Candles like that, and then start heading down. But I don't put a lot of emphasis that as a break. Not at all. I don't at all. A candle that opens, tests through it, and in the same session, it finishes in a positive note. So we get all that out of the way. So yeah, that's obviously the anchor's held, and this would have been a good little entry, especially off a higher low. It's not technically what I love to see. I mean, I don't mind that at all. And if you probably there's nothing there to say by it. That's an entry because it's got a confirmation. You got this little washout. You got a higher low, but I wouldn't have been looking for too much of a move. As it's played out, it was a cracker of a move. And then if you did buy that there, great entry. Um, then it's popped up. This I found a bit tough because you got this push up here. You can see that, and then it's come straight back down again. It's took out this little inside level, not a key level, but it took it out. But then it went sideways. I mean, you could have bought it ideally through there. It would have paid off. You got your stop below there, and as it did, it's broken through. Then you had to contend with this high, which in hindsight, it's banged straight through it. I don't know what's caused that, whether it's news. Um, that would have been the entry there. Like I said, I just found that a bit hard because this price action was a little bit too choppy for me, and I ideally just found other stuff, something that was better, something that was trending up. You haven't had this big contraction lower, you haven't this big macro correction, all that sort of stuff. In saying all that, it's just got through that high probably a couple of days ago. But what I don't like is the fact, actually, let's just draw this up again. What I don't like is the fact that it's stretched through there. It's stretched into that resistance. Does that make sense? So what you've got is, this is the most sort of recent push, only minor accumulation, whatever. It's just people have been buying in here, that it's accelerated, and it hasn't looked back. So day after day, it's just charged straight up into that resistance, and it's broken it out. It's just broken through it. I don't think a move, especially off a minor sort of higher low as that, if it's something like you've got this big push up, which is here, then that pullback, it's come down to here, then you've got to pop up. Then you spent a lot of time chopping around in here. That's a lot stronger. And then it's to push through the high. Then you could probably get this minor pullback and go again. But the fact that it didn't spend much time holding in here, and then it just sort of projected straight up into the highs, 87.5, and it's just gone through it, you might find that it has a bit of a corrective phase lower. I don't know. I wouldn't buy it at all. Wouldn't buy it up here. If you're long, we tighten my stop up, say below 85. Again, it's a tough one, because technically you probably have your stop below here, and if you bought it here, and then I would have probably locked in some partial exit up at 87 thereabouts, just below that high, and then you sort of got, in the second trade, you're not, if you left your stop down here, you're not taking too much risk. It's going to be a positive trade anyway. But if you want to tighten it up, you probably tighten it just below 85 on the second half. If you haven't taken a partial, I'd be inclined to at least take a partial on a pullback, stop yourself out of half at a small gain, and then figure out what you can do with the rest. If you're not in, wouldn't even bother just yet. I'd be more inclined to, if that goes on with it, okay, again, tough. That's trading. It just keeps going. Then you just go and look elsewhere. I mean, you've got 1,000 stocks or something you could look at, even probably less than that, but you've got quite a few that are going to be a nice little setup like that. But you're in the early stages, and then you just take that trade instead of worrying about this one. But yeah, if you're looking at this, you'd want to. It's had a good push up. You'd ideally want to see a big sort of a washout, and then I want to see some high lows build before I potentially jump into that one, just so I can minimise my risk. And if it does this type of price action, cleans a few out, and it comes back, it could even come back to the 80, 82 zone, still hold this trend up, then I think that's got more emphasis to continue on. And then straight away, if you enter it, you're probably going to be right straight off the bat, rather than buying it up here, taking some heat. A lot of people might even just break through. You might get this type of, let me just take that back. You might get this push up, pull back, just takes out the high, and then you get this major corrective phase. So you buy on an entry, an entry with a break through that high up here, then it pulls back and just retraces on you. And if you're just sitting there taking this heat without using the stop, you might get stopped out there if you do use a stop, or you take quite a bit of heat and then you don't know what's going to happen. And it's not a good feeling when you buy into something and it turns around and traces straight away. You'd rather buy when the market's done its work to clean out a few people, and then you're looking to enter when it's on the rise, when it's coming out, it's gone from contraction to expansion. And ideally, that's what I'm always looking for, to buy when it's expanding higher. All right, so that's probably about it. Probably have to call it a day there. I hope that made sense there, Gino. To anyone else? Helen, you're right. Resident star trader. Only because Dav's busy. If you're listening, Dav. No, anyway, well, we'll probably call it a day there, guys. Thanks very much for joining us. We'll be back in on, excuse me, back in on Thursday. We'll see what happens in the next couple of days with this US can find some base, and we'll start to pop up again. Keep an eye on that. Anyone that's interested, keep an eye on that US yen. I don't know what it's doing right now. That's the 4-hourly chart. Just look at the 30-minute. I expect that probably going to pop up, but just going to be watching to see a lower high, see if that plays out. But yeah, just keep an eye on that and see if we do get quite a bit of weakness, and see if I'm right, basically. See if we do get that push down to, where was it? Somewhere around 107, 107.80 or thereabouts. But if it does, it could be a lot of fat in this, especially if it pops up, builds a little minor lower high, and then continues on. You want to see that acceleration. Acceleration like this would be good to see, especially when it hasn't had a decent enough pullback. So we'll see how that one goes. Anyway, guys, call it a day before I keep yabbering on. Thanks for joining me, and we'll see you on Thursday. Cheers, guys. Bye.